Hello everyone and welcome to Day Trader S&P 500. Today is Monday, January 23rd, 2023. This is Dale Woodson, editor of Woodson Wave and Day Trader S&P 500. Excuse me guys. I wanted to let you guys know also about our special. We're celebrating 25 years and we got 25% off for new subscribers.
25 years ago, in December of 1997, the first issue of Woodson Wave Report was published, and we are celebrating by offering you 25% off our most popular monthly subscription for a limited time only. Simply type 25 in the discount code box, and you'll instantly have 25% off of the first month issue. You can see here is our website. You click on register. There is register. This page comes up. Fill out all of that nice stuff. Click on the monthly subscription. Note there can be no refunds with the discount code. Come down to the discount code here. Type in 25. Hit apply, and bam, there it is, 25% off. Thank you.
Okay guys, in addition to that, I want to let you guys know that we also have, let me minimize that and get rid of it. There we go. We also have on our subscription services here, Elliott Wave International is offering a free book. Everybody asks, where'd you learn Elliott Wave? I learned by reading that book by Frost and Prechter. There's a link where they're giving it away free, and I read it over 25 years ago, and there's the book there. So that's where I learned Elliott Wave. Get a lot of questions about that. Okay, so without further ado, let's get into our analysis today. Some things to catch up on. There is one change on a very small 1 to 10 minute chart, but let's start where we always do with our Qs. Okay, we have wave A down here, wave B up, and from wave B we have 1 down and 2 up. You can see there that wave 2 up retraced just over a 50% retracement of 1, and then from there we've got another 1, 2, and this second wave is a lot higher than the 50%. Let's just see here real quick while we're here. Let's put this on there. Let me make this bigger so we can get a better view, and we'll get into that further going into the future. Let me put that 2 over there and that 1 down there. That's pretty close to even, and that is, and I got the 1 in the wrong place. My apologies. There we go, right there. So that is just over the 786. So this 2 right here retraced about 50%, and this one is at 786, and we'll see if that goes above there or not, but so far it's a 2. If it goes above that high, which is 296.88, then it's not a 2, and that count is wrong. So we've got an A and a B up, and then for wave C we've got 1 down and 2 up. Okay, and then we've got we can look at this further here. So we anticipate a 1 down, 2 up, 3 down, 4 up, and a 5. And if you look at this 1 down and that 2 up, then 3 equals 1 at 217. Okay, and that is the nearer term hour or daily chart. Okay, and on the much bigger time frame where we got that A down and then that B up, wave C gains equality with A, an arithmetic scale at 195 and an log scale at 220. We're a long way from there, but we're looking at this internal count, and this 1 down, this 2 up. That 296.88 has to hold. We always ask ourselves, where are we wrong? This 2 can't be a 2 if it goes above the start of 1. Okay, so that's the Qs. Again, the bigger retrace was the 50, and this is a 786, almost dead on as of today. That should be today's price action right there. Okay, so let's get into the S&P 500. We're looking at a daily chart from the all-time high, 5 waves down in black for A in parentheses, and then a B wave counter trend bounce. Okay, direct hit on price and time, and from there we've got a 1 down and a 2 up, and again, just like the Qs, a 1 down and a 2 up. Note that this 2 up here, retraced right at near the 786. So again, as I say, the Qs are leading on the way down and lagging on the way up. That's where the Qs on this 2, they retraced less than 50, but this retraced between a 618 and a 786. And then again, we've got this 1-2 right here. Let me, and again, we're looking at the same thing. We're looking for a 1 down, 2 up, 3 down, 4 up, 5 down, 3 gains equality with 1 at 32.67 in the cash. And there's our larger wave 3 targets as far as its arithmetic scale. 31.43 is what we're looking at for a minimum there. But I think let's go ahead and see what that, let's do the same that we did. Oh, what we want to mention too, before I do that, is this red trend line going from the all-time high. It hit this wave 2 high, it hit this wave B high, it hit this wave 2 high, and then it did a throw over, if you will, back here on Tuesday, December 13, and it just touched it, and today it went back over again. So now it's like, does resistance become support, or does this do what it did before and says, I don't belong here, I'm getting back down. I don't belong here, I'm getting back down. Third time, I don't belong here, I'm getting back down. We'll see if this resistance line holds, but that's the big question now. Either this 2 goes up too high to be a 2 above that 4100 in the S&P cash, or it goes and straight back down below that line and says, I need to be a 3, I don't need to be up here. Okay, that high so far is 40.39, I believe it is. So this is old information here. My apologies, I didn't update that. But that is on the 23rd today, and it's 40.39. Let's just change that right now. Okay, and let's make that the 23rd, and that's okay. And then we'll do a 40.39 here, so we get everybody up to speed. That's on the cash market. I was busy with the futures market all day. Okay, there it is there. That's that 2 at a smaller degree. And then 3, 4, 5. There's, okay, we went into all that already. Okay, so we'll see how this trend line holds, or if it doesn't, we'll find out probably shortly. Let's get in the ES futures again. The same chart, 5 waves down. This one's in red for the A in parentheses, B wave up, direct hits all over the place on here. We had so many, we just quit marking them. I think our customers for our newsletter expect it at this point. But anyway, here is 1 down of C. There is 2 up, that blow off top, and I call it a blow off top, and you can see what it did again. It went above that trend line, that red trend line, and went immediately back down. Then it's been hanging around it here. And we had that, I believe it was 40.35.25, if I'm not mistaken, was the high back here a few days ago, last week. And then it made a new high today above that high, okay? So, again, we're above that trend line. You can see it there. I can make it a little bigger for you guys. There, it went above it, snaked down, it's hung around it, went down, and now it peaked above again, which was today on the 23rd. You can see that 56.75 high. We've got Fibonacci 8+1 trading days down for wave 1. At this point, we're 2 days away from perfect Fibonacci in trading days and calendar days, and today's Monday, so I wouldn't be too surprised to see this go up for a couple more days and make a slightly higher high. Again, it can't go above the 4180 blow off top on the 13th, otherwise this is no longer a 2. 1 down, 2 up. 2 cannot go above the start of 1, which is at 4180. And again, wave 3 gains equality at 36.65. You can see it here. And the larger wave 3, this is 1 in parentheses, 2 in parentheses. The larger wave 3 gains equality at 33.55 and a quarter. That's right down there. And the larger wave C, we had the A down, back on the left of the screen, the B up. C gains equality at 3159.75. So again, a normal ABC 5 down, 3 up, 5 down correction in a bull market would take us below 3,200 in the futures, and C equals A down here below 3,200 in the cash. That would be a normal correction, 535. We just want to see wave C gain equality with wave A. Okay, and it could go much lower, but we'll see once we get down and break this wave 1 low. That has to happen. And again, the make or break up here is the wave 2 high. I think I may have this on a smaller degree. Yeah, here we go. Okay, so here is that 4180 blow off top on a daily chart. Now we're going to look at this a little bit closer. 4180 on an hourly chart. Like I said, the 4135 was broken. All it did was break the very smallest degree of trend. The 1 and 5 minute charts, the hourly and above, remain intact. And they do as long as this 4180 holds in the futures. See, we have 5 waves down here. Then we have an A up in parentheses, a B down, and a C up. And you can see that C equals A in parentheses at 4076. Okay, that's this black line here. It didn't get there yet. And this within C, A up, B down, this C equals A at 4045. It did get there. So it's sitting in between those two targets at 4056. That should be 75. Let me fix that. We don't have we have quarter points in futures, not 1/100th points. That's a typo. Fat finger there. There we go. And that is the actual high, which happened today. And this looks like 5 waves up for a C. It's clear. 1, 2, 3, 4, 5 there. That should be wave C. So I'd say I give it a day or two for anything up, but then we need to see these lows broken. This 39.01 and then this 38.91, then this 38.19. And we'll get confirmation that wave 3, this is 1 down, 2 up, wave 3 is in play whenever it gets below the wave 1 low. Long way to go, but we'll see how that goes. I don't know if I have that marked. I don't on the futures, okay? But that's what we're looking at. I want to show you guys. I think I got a couple picks here, and that should be the same chart there. There we go. And as soon as that 4135 was broken to the upside, we put out a report, and that's not the report. My apologies. Do I have that report here? Yeah, there it is. That's the January 23rd midday report. You can see our chart there, and there's that wave 2 up. Okay, so that is that same chart. A little static, better to see. See all the retracement targets there. Make or break. Where is it wrong? 4180 can't be a 2. Can't go above the previous start of 1, which is 4180. That's the key area there, and that would break the hourly bar chart right there. Okay, and then I don't know if we have much more information there. The wave 2 targets there. 4180 remains the make or break. Purpose of the second wave is to make the bulls believe the bull market has returned. It appears to be serving its purpose. Okay. We talk about the trend line up there and a larger degree wave 3 intermediate degree of trend targets there. Okay, we'll see how that trend line works, but let's get back to that pick, or we'll just get into the pick right here and leave you guys with that. See what the next couple of days brings, and until next time, take care everyone.